Hello to you, Nauts, and welcome to this daily market commentary for Tuesday, the 25th of June, 2019. A relatively quiet start to the week on Monday. Saw crypto consolidating and the dollar drifting lower. A recurring theme, it would seem. But would Tuesday bring more of that, or are we going to see a little bit of a retracement of the current trend? Well, for crypto, the market seemed keen to push higher initially, with Bitcoin touching a high of 11,470 and Ether back up to $315. Litecoin continues to be the laggard, dropping as low as 128.75. At one point, it seems Litecoin led the way, or led part of this rally for a while, and it seems like the market's happy to take some profits on those moves at the moment and maybe move into some of the other coins. But interesting to kind of see it happen at these levels. There's still plenty of headlines around Facebook's Libra project. The US Congress is pushing for another hearing on their planned cryptocurrency next month. And I noted today the French central bank governor was quoting as saying the Libra project must seek a French banking license. It's clear that this will not be plain sailing for Facebook, but the potential adoption of Libra obviously could be a real game changer for the digital world. That's the extra scrutiny, and I think we will expect to see that scrutiny come from many directions over the coming months. For FX, a quiet start would certainly turn into an hour or two of volatility, courtesy of several of the Fed speakers I mentioned yesterday. Always important when you look at an economic calendar. It's not just the vanilla data releases which can move the markets, but always keep an eye out for any central bank governors or board members speaking, because they really do have the ability to move markets, and especially given the current environment and the focus on the Fed and interest rates, which is why I sort of highlighted that yesterday. Don't even start, oddly enough. US new home sales data as well as US consumer confidence data were both coming in a little weaker than expected. Saw a continuation of the weakening of the dollar, with euro trading up as high as 114.12, and also saw gold making highs just shy of 14.40. And then we got the double whammy the market really did not want. First, Federal Reserve's Bullard, obviously arguably the biggest dove at the Fed, argued there was no need for a 50 basis point cut in US rates anytime soon. This was followed fairly shortly by Fed Chairman Powell warning that Fed policy should avoid bending to short-term political interests. I can't imagine what he was referring to there, but maybe the occasional tweet by Mr. Trump around Mr. Powell's longevity might have been the subject of that. Not what the market was looking for. Euro dollar immediately dropped down as low as 113.45. Dollar yen jumps up to 107.41 from a low of 106.79, and gold reverses its earlier gains, falling as low as 14.12 at one point. Equity markets were equally unhappy with the comments. The Dow Jones dropping 179 points, or just shy of 0.7%, and the tech-heavy Nasdaq falling by around 1.5%. Had concerns that things might not go well at the upcoming G20 meeting, and all of a sudden the recent market euphoria seems to be very quickly forgotten. My personal take is the market had become a little carried away with the rate cut story and probably needed the Fed to give a timely reminder of the reality of where we are. You know, this whole conversation on rate cuts and looking at what the Fed are going to be doing going forward in the short term has really sort of only become a conversation piece sometime in the last month. You also got to remember the dangers of the US and China not agreeing on a trade deal have also never gone away. That is lurking in the background, and there are many commentators saying that should they not come to an agreement, then it could quite easily trigger a global recession. So need to keep that in mind as well, which means today's price action was probably not surprising. Moving on to a technical piece up in front here, the chart up here in the background is the Dow Jones Industrial Average. Just want to take a very quick and vanilla look at this. As you can see from the chart, the Dow Jones came within 50 points of a new all-time high last Friday. Up here, as you can see, this high here made back in October was actually an all-time high for the Dow Jones, and we came just within 50 points of that, which is is pretty impressive given the retracement we had back down towards 21,700 in December. It's over a 5,000 point drop from the highs. The question is this chart sending a warning? As in, are we making a near enough a double top here? Especially given the some of the comments that were made today and concerns over over the trade war, or are we gearing up for another leg higher? Obviously, difficult to tell from the chart, but it does highlight how close we've come to making a new all-time high. I think where the chart goes next is certainly going to depend a lot on what happens at this weekend's G20 meeting, and then obviously the outcome of the Federal Reserve meeting in July. So plenty to look at, but we are, as far as stocks are concerned, at some fairly elevated levels right now. And with that, I will say goodbye for the day. Wish you all the very best of luck, and look forward to speaking to you tomorrow. Cheers.